GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. It's our final weekly webinar for the year 2021. So obviously we're starting to think about what 2022 could bring, but we still do have one more week left. It's likely to be a pretty quiet week. There might be some volatility here and there because normally between the Christmas and New Year's holidays there's a little bit less volatility in markets. A little bit less people involved in the markets, which can actually create a little bit of more volatility in the short term. Typically you don't see any major new trends developing at this time of year, but there were always exceptions to the rule, of course. So the plan, as usual, is to go through the major currencies, then commodities, then indices and cryptocurrencies. If there's anything else you would like us to cover in these videos, please drop us a comment with some recommendations, any strategies you'd like to discuss, anything along those lines. We're happy to mix it up. Otherwise, if you do get some enjoyment and some useful information from these webinars, please give us a thumbs up, click the like button, that really helps. Okay, so let's start with the euro-dollar currency pair. I've got this started on a weekly basis because the big question we're asking, and this hasn't really changed from last week because you can look at these weekly candlesticks and you can see we've basically gone nowhere for the last 5 weeks, is will 112 hold a support? You can see the big 112 round number we've got as a dotted red line here. And that was a major resistance. And then you saw we've discussed this before, but we had a major chop higher and then lower during the onset of the pandemic. Then we got a break higher, a test of 112, and we got a good rally up. Now we've retraced a lot of that rally. So there is some sort of consolidation happening here. The question is whether it's some accumulation before a bigger rise in the price, or whether it's just a it's just a consolidation before the trend continues lower. There's no particular evidence one way or the other. You can see that we're oversold now on the weekly chart. We were oversold and we've come off oversold levels. So this would indicate that actually it's not, from a longer term weekly chart perspective, it's not typically a really good value area to be selling. But obviously the momentum is lower, and so this is more of a kind of selling into the trend type position to be taking. So big questions over the 112 mark. If we drop down to our kind of trading time frame, if you like, a 4-hour chart, you can see this is the situation that we're pretty much going sideways. Pretty normal for this time of the year. Going between 112.50 and about 113.50 to 70, and we're looking to see if we can break out one of these resistance. So on a short-term basis, we've got this range that we're looking for a breakout either higher or lower, and we know that just below we've got 112, that major support, and if that is to hold, then a break higher we can make sense of it, because we know this long-term support is holding, and then we've got some supply areas above here from that downtrend where it initially broke lower, and then also this period of pause here. They could be some resistance if we get a breakout to the top side. I would suggest probably if we do get a breakout, since this range has been going so long, it could even go beyond these areas, because typically the longer a consolidation lasts, the longer the trend will last when you finally do get that breakout. If it's just a little short consolidation, the resulting move of it from it typically won't last as long. So that's where we are. We're in range trading conditions here. No particularly great opportunities in the middle of the trading range, I would suggest. We are holding on to the 20-day moving average on the top side, but in a sideways market, I'm not putting too much emphasis on that. Switching gears to the British pound, we've talked before about how this is potentially an area of former resistance turned support. I think it is important, and we have got a decent rebound off it. The important level here, which I don't have drawn in, was 132. Right around, okay, I'm not going to get it precise, about there. You can see 132. Debatably, we've already dropped through one important area, which was more like 135. So we felt we couldn't hold on to 135 because we didn't make much progress beyond 35. It was a really furious rally off the lows, but we stalled around 142 to 43. Dropped back to got a few attempted rallies before 135, a false break lower, but we just couldn't do it. Now we're back down to 132, as I said, and for 1, 2, 3 weeks we held on. For the fourth week we held on, and now we've had a bullish weekly engulfing candlestick, and we suggested that might happen last week when we were talking about the possibility of a base in the pound. We didn't quite get to oversold territory in the pound, so but I don't think that's particularly material, just that 30 level or not. It's just the fact that we're pretty low, or we were pretty low in the RSI on a weekly chart. Now we're coming off it. So for momentum players, this is when you would look to continue to sell into the trend, but value sellers would be looking for higher prices here. So that's one reason why we might just get a bit more upside, is those, we're still quite low on that weekly RSI. Coming down to the 4-hour chart, you can see that unlike the euro, we actually have snapped out of the trading range. It wasn't quite as there haven't been quite so many tests in this range. It was grinding along the bottom of 132, and then we talked about this trend line before. We got a pop above it, came right back down, made a fresh close. The lowest close in a number of months, but then we've got a nice bullish engulfing off that, held onto the 132, and then you can see we had a nice rally up, and we're consolidating above those two former highs, which are quite clear resistance in this range. Wouldn't be a surprise in kind of choppy holiday conditions just to see us dip back into the range. I think this is a decent breakout and is a bullish sign. We're back above the 20-day moving average, but I wouldn't necessarily hold this, call this form of resistance a really golden support. We did have good rally ups, and maybe we dip a bit back under it, perhaps even back down to the 20-day moving average before attempting the next leg higher. But the pound looking a bit more solid than the euro, and we can attribute that to some of the fundamentals, like the Bank of England rate hike, but and obviously the ECB not looking to hike rates anytime soon. But actually, it's just last week we got a bit of a general risk on move in markets. So risk on meant higher stock markets, it meant a rebound in oil, and it actually meant a good week for gold, which we'll see shortly, but it meant a bad week for the dollar. And normally when the dollar's doing badly, the pound tends to be kind of perceived as one of the kind of riskier currencies, while the dollar is a haven. So the pound tends to do well in those risk-on moves, a little bit better than the euro, you could say. So pound looking bullish in the short term, and it just question marks whether that 132 has finally held. It looks like it has, so we're thinking maybe to some pullbacks back towards that major 132 as opportunities to ride this further recovery higher. Dollar yen, this is our weekly chart, and it's sort of the opposite of the other charts. Obviously we've just banged into major resistance just shy of 115. It's about 114.70ish. You can see the former high from back in 2018. We've talked about this obviously in previous weeks, and you can see now, unlike those other charts where we were looking for potentially a bit of a recovery in the euro, recovery in the pound, we can actually see that we're attempting a higher close in the coming week. So we've had these reversals lower. We've come down and tested what seems to be a kind of a retest of this rising channel, and for the past 3 weeks we've been pushing back up into that resistance, and as of this week, getting very close to that 115 mark. So will it be another false move higher like these? Well, obviously the body of the candlestick at one point was right up here, but it reversed all the way back down. Do we get another reversal? If we do, I think that will be a double top long term, and could open up a much bigger move lower. But actually the trend is up, and we've had 2 big reversals here. that's all we could get. That's as far down as we could get. It suggests to me that this market's looking to break to the top side, and that's the direction of the trend, and that's normally the way you want to be. Looking down on the 4-hour chart, looks a little bit messy, but you can see the kind of there's our longer term level that we were looking at, and then we had been in this trading range down here. Oh, lost my trend line. You can see that why is it doing that? Let's hold on again. There we've got our trend line through here, and you see we've got we had one false break into that kind of long-term range, coming back from, this has it been resistance for a while. We've got one little dip back, a false breakout, dipped lower into the range again, but held onto the support, and then finally got a more more durable breakout. And so even on this short-term chart, you can see we were range trading, we were under the 20-day moving average, got a false break out of the range and out of the 20 DMA, sold off, but actually held support in the end. And then the bulls came back in, bought up at support, and we pushed up through resistance. And as of the start of the new week, we're actually looking pretty strong in dollar yen. So looks like after a big sell-off from multi-year highs, we had a long consolidation, and it could have resolved lower, but it didn't, and now we're resolving to the top side, and it looks quite positive in dollar yen. So first target obviously would be these recent highs, but then then we're looking at potentially a new long-term uptrend. Switching gears to the metals markets, this is the weekly chart for gold. We've been talking about this 1770 level for a while now. This chart with me needs a bit more zooming in. This level, for whatever reason, has seen a few false breaks lower. Most recently worked very well. You can see the big reversal off there. False break here, obviously the false break flash crash, and gold just seems to be holding its own. And decent bounce off the lows the week before last, a continuation last week, quite a small body, but gold doing well in a risk-on week. That's a positive sign for gold. It has been benefiting from the dollar weakness, so if the dollar starts to strengthen again, I would expect some of these gains to unwind. Overall, it's not a great directional market. It's pretty choppy and sideways, but you can see that overall what we're looking for is just another move up to this declining trend line, and a break above that declining trend line, and we're in a slightly different environment. We're still going to be kind of testing all these old highs as resistance. We're still going to be more or less sideways, but that will be our first major signal that actually this market's ready to recover. And the fact that we've held on to this 1750, 1770 support so many times, it looks good for now. And I think if that 1750, 1770 support does give way, then that's probably when we can turn pretty bearish gold, because it's worked for so long. When it starts to not work, that tells you what you need to know. On the 4-hour chart, in terms of trading this week, we've got a nice little kind of bounce off a combination of support from the 20-day moving average and this little broken trend line from these former two highs. So that worked quite neatly. Rally up, pull back to old highs and a moving average, and a rally up to the high. So that's pretty textbook technical analysis. And obviously we're just testing that kind of range high at the moment, and getting a little bit of a pullback from there. So still kind of range bound, but if we're assuming this trend has got legs, we've had our pullback, we're looking for this trend to extend higher. Switching gears to silver, this is our long-term range in silver. We talked about this the week before, it was last week, about as being a potentially very interesting opportunity and one of the better opportunities. We did get a follow through, not a massive one last week, but this is what you want to see. That was a hammer pattern, but now it's actually formed a morning star reversal, with the lower candle, the long wick, and then the follow through upper higher close the third week. So this formation here at a major support level is bullish, and it looks similar to this last one. So maybe silver can do it this time. This is, looking at this reversal pattern, it's a candlestick pattern. It's not a it's not a long-term price pattern like a head and shoulders or a double top, but it is happening on the weekly chart. So it typically means it can influence the next 1, 2, 3, 4 maybe weeks. And if that's the case, we could get a further push up here. Not to say that the this support isn't eventually about to break, but it just looks like this pattern would indicate a push higher over the medium, over the next few weeks, as I say. Getting a bit of a downturn at the start of this week, and you can see here, maybe if I zoom out a little bit on this 4-hour chart, you can see that this is what we've been pointing to last week. We've been talking about the downsloping trend line, a retest of that, and we're talking about the resistance through there as a kind of more reliable resistance to break. We actually got a false breakout to start with. Little lesson there in trading is, if you get the false break, you try to trade the break, it's a false one, don't give up hope. Trade the next one. The breaks don't always work the first time, often they don't, but third time lucky, we've got the breakout. And now obviously the price pulling back, it's another test of people's nerves who did trade that breakout, but it's also an opportunity for those who didn't actually catch that breakout to try and buy into the resistance, with of course the knowledge that we could get a drop through and it could just be another false breakout, just a more extended one. So this 2250-ish, this resistance, we want to see this hold ideally for this what seems like a breakout to continue to the upside. If it doesn't hold, looks a bit more dubious, there might still be opportunities to buy lower, but it will be more of a kind of choppy range trading situation. So silver obviously coming off the back of a big downtrend, but there are some signs of a bottom here. I mean, this is what you want to see in terms of a downtrend, loses momentum, consolidate, breaks to the top side. I mean, this is what you want to see in terms of a new trend developing. Obviously, if you are buying early into a trend, it's less certain, but the potential reward from buying earlier is greater than if you wait for it to be more confirmed. So this is just the nature of trading, obviously. Let's switch gears to WTI. It's a familiar pattern, right? Across a lot of these markets, isn't all happening exactly the same time, or for in exactly the same context. But we are again getting a test of a major long-term resistance turn support here. We've had a decent bounce off it. And if I zoom in just quickly on this weekly chart, you can see last week was a very good one for oil. I mean, this is a very bullish development where we had a rebound off support, a follow through, then a consolidation. So a little harami pattern, right? So anyone trading that harami breakout to the downside, unfortunately that wouldn't have worked. But you got what some people trade as a fakey, where it fakes down one direction, then the weekly close happens in the other direction, and you actually end up with a bullish engulfing pattern after a fakey lower, and then you trade this breakout. So this is certainly a bullish candle. Doesn't have to mean the prices are moving high, but we are above the long-term moving average, and we have, if we drop down to our 4-hour chart, probably I'll zoom out a little bit. You can see we've broken that resistance, and there's also a bit of a trend line. Oh, how am I doing this? There's a bit of a trend line coming down through those highs, and you could see that trend line broke along the 20-day moving average. Bit of a chop around the resistance, could be a false breakout. As I say, it is choppy. Just remember, it is choppy between Christmas and New Year's trading, so the breakouts may be less likely to hold, but for the time being this looks quite decent for oil. If you drop down through this resistance, maybe this is a sell on the false breakout kind of trade. But overall, that big weekly engulfing candlestick to me suggests that the price looks like it's set to move to the upside. Just whether this consolidation is enough to extend the upside, or maybe we need another dip down, perhaps somewhere towards the trend line and the 20 DMA again, that remains to be seen, but opportunities either way. Switching gears to indices, this is obviously the big long-term bullish market that we're experiencing at the moment in the S&P 500. Very shallow pullbacks of just sort of the deepest ones tend to be about 4 weeks, like a month. This one had a rally up and then a drop again. This one lasted maybe a couple of months. That was right after we hit new record highs. And then since then, it's just been 1, 2, 3 weeks going sideways, make new highs. 1, 2, 3, 4 weeks going sideways. 1, 2, 3, 4, 5, 6 weeks going sideways, breakout. 1, 2, 3, 4, 5, 6. The 7th week we're breaking out. So same thing looks like it's happening here. 1, 2, 3, 4, 5, 6, 7. We're on our 8th week, and we look like we're keying up a breakout above 4,700. Potentially to a new record high. Potential for a false breakout. If we do get a false breakout, that opens up a much deeper decline, but you can see the trend very much in place on this weekly chart. And this is just the resistance area you can see we're kind of contending with, but tried to have a big sell-off, came back into the demand area, rallied up nicely. We could sell down from the supply area again, as we have the last few times, but I would suggest that we're on our 5th or 6th test of this resistance, and we're probably teeing up a breakout. That would be induction of the trend. That to me seems the most likely scenario, and that would be obviously in sync with a Santa rally. Okay, last but not least, Bitcoin. Maybe this is a big long-term double top. It doesn't really matter for now in terms of trading. I've highlighted on the weekly chart, you can see, peaks here, troughs here, troughs down here, a peak, and then a gap, and then a peak, and 2 peaks here. So I've highlighted in what I think are the major kind of actionable zones, and we are bouncing off one of them, which was this peak and kind of this consolidation through here, these bodies through here at least. I think this is an interesting area. This one is more powerful below, closer to sort of 40,000. What is that? That 40,000 is definitely pretty major, and obviously the lows were pretty much 30,000, but a bit beneath. 20. I think it got as low as 27. Depending on what prices you were using. But again, another bullish engulfing, not the most powerful looking bullish engulfing candlestick ever, but certainly qualifies, matching lows and higher high and higher close at the end of a number of down weeks. So that's quite a bullish sign for Bitcoin. It's paused at the next zone which I've drawn in based on this peak here. Could it extend it down to this trough over here? So these major turning points are still affecting Bitcoin. It's still trapped in this big range. But if we, this bullish engulfing candlestick's a good sign. And then if we could get through this zone here, about sort of 52,000, that would be a good sign that we could actually retest this major resistance and possibly long-term, new highs up around the kind of 64, 60,000, and then the peaks up here at how high did we get? 69,000 just about. And we can drop down to see how that looks on the 4-hour chart to finish up. Let me zoom out a little bit here. You can see that this downtrend line was broken. We had a minor retest of it. We bumped up into this where we had this gap starting, and that long-term area. You can see kind of how it's affecting things on the short-term chart with these gaps, etc. So natural that we'd get a bit of a pullback from that. It's that long-term area of importance that I cycled, that I cited around 52,000. So ideally we get a short-term consolidation, then a pop, and then 55,000 will be on be a test, and it will be this area of consolidation that might cause the price to pause again, and then we've got this next major area, as I mentioned, up approaching those record highs. Okay, I'm going to leave it there. Thank you very much for tuning in, everyone. Have a happy holidays, happy new year, and see you again, not next week. There'll be a break, but I'll see you the week after. Thanks, everyone. Good luck trading this week.